Interest rates are coming
Hello.
down, so that reverses course. I think the Russell goes up. I'm literally trying to make it as simple as I can because it's interest rates are coming, their borrowing costs down goes down. Then their money to borrow. And small cap companies which require more rates make borrowing costs hard. High interest rates, S&P 500. Why I think the Russell has potential from here to outperform the S&P 500. The Russell has been held down by high interest rates. High interest rates make borrowing costs harder for companies like the mid cap and small cap companies, which
I've
require
never
more borrowing.
traded
They're just
Russell.
growing companies, so they need more money to borrow. So if the borrowing rate of companies goes up, then their income, their real income after paying that debt down, goes down. So these companies have been held down by higher borrowing costs. Let's keep it so simple, right? Because interest rates are coming down, so that reverses course. I think the Russell goes up. I'm literally trying to make it as simple as I can because it's easy to.
I mean, technically, you can trade Russell as well, apparently. Let me just, Wait, is that the 2000 indexes, like 500, and then is that US 1000? US 1000, what the fuck? US 2000, let's see. That was CFD. There is, what? That's crazy. This is like the top 2000 stocks or whatever. Anyways, market's open right now. It's like mad cheap right now, but I mean, for like 2.5k compared to like these rates, like NASDAQ's like almost 20k. So, basically, okay. So it's AM session, of course, and we don't really have any. It's a Monday, so obviously like market's a little slow, but we don't really have any like red folder news. However, tomorrow we have red folder news during AM session, like during the first hour, like right after the first hour of AM session. So at like 11, I think it's 11, yeah, 11 a.m. New York time. Anyways, getting back on track, you can see that this is basically the swing low, and let me see. So obviously we have this bullish bias on SMT on Dow Jones, and we have this, which is basically you see this low being swept over here, and then we have a distribution like right after, but we see a consolidating phase over here. So we can see this sweep, this area of sweep over here, and we have this distribution like right after. So what does this indicate, right? So we have a distribution. So basically what I'm expecting price, so you see this manipulation, I'm gonna distribute higher, but the only problem is it's consolidating way too much, right? So ideally I would stay away from this. Let's see what I don't really know what this is called. I think it's like an options trade. If I search up QQQ on Maven, I can't find it. See, it's not even there because I can't trade options on Maven, to be honest. It's basically anything that's not forex, crypto, or indexes. You can't trade those. Oh fuck, I almost dropped my fucking bottle. That's crazy. Anyways, you can see that this is basically, okay, I gotta go back. Let me just go here. Okay, so USD/JPY, honestly I wouldn't take a trade because I'm a little suspicious of what's going on here, even though we have this demand zone. It's like a 4-hour demand zone. But yeah, I'm a little suspicious because it's consolidating way too much. As you can see, it's ranging way too much. Like it's in this area. Of course, we're breaking structure towards the upside, but like I wouldn't really take a trade from here. If you could even like, you could technically take it from like even like midpoint of this body towards like the high of this wick, but now I'm way off that. That's way too risky, to be honest. Like even though these lows were like swept technically, like I wouldn't take this. I wouldn't take that. Anyways, let me disregard JPY for today. So as you can see, this fair value gap seems to be completely getting dicked in the ass, as you can see. So yeah, I wouldn't go for that either. And you can see that there's a fucking what the fuck just happened here? Like this market is so like, the price range is way too balanced for me to like entry. So I wouldn't entry here. So there's an order block here in supply level. Wait, my bad. Demand level. So it taps back, but if we see like a proper reaction towards the upside, then I would take it. But that is if this interterm high is broken though. It's very unlikely that it will go higher. So let me just cancel that out, because it's very likely that it will go lower though, because you can see that it keeps breaking structure towards the downside. So what I'm expecting here is not this, right? I'm expecting price, right, to go lower, because you can see this inverse fair value gap. Even though it swept this high, it's distributing towards the lower side. So it's way too choppy. So I would ideally stay away from this kind of market. And we seem to have I think this is like a 4-hour fair value gap. It's not really a 4-hour fair value gap, but it seems to be testing this 15-minute fair value gap. So this is like an F15 minute. Let me just mark that out just to not get confused. So it seems to be testing that range, and then I'm expecting a reversal right after towards the upside, or a sell-off. So let's see how this goes, I guess. Because if you look at this, for example, you can see that this is a short-term high, and I'm expecting a price retracement from like, use this as a support level to go higher. It's pretty simple. So you see this inverse fair value gap, tap back into it, and then go lower. So obviously this is being used at this point, so I'm just gonna mitigate it, in other words. So let's see. So over here, I'm seeing a bit of a, so you see the sweep, the swing low has been swept over here. And we're seeing a opposite reaction, of course, like a distribution leg. So let's see how this plays out. If we get an opportunity, then yes, for sure, I will entry. But if not, I wouldn't entry, ideally. So if I see like a proper opportunity somewhere like here, then I would entry, 100%. This is a 4-hour fair value gap? No, it's not. A 4-hour order block. So it's probably going to retrace. If it's going to use this inverse fair value gap, it's going to retrace all the way towards the demand block. Use this 4-hour fair value gap as support, right? 4-hour fair value gap as support, and then go higher. Like for example, like this, then do that. So that's what I'm expecting price to do. So overall, this is a mess, but I'll just go off this right here. So let's go to the 15-minute. And as you can see, bullish weekly bias, bullish daily bias, bullish 4-hour. But now I'm seeing a bit of a bearish reaction, but it's consolidating way too much. So ideally, I would stay away from this. There's so many equal highs. Look at that. So I'm expecting price at some point. I'm expecting a manipulation above this and then go lower. In other words, like a sweep and then go lower towards, I can short this from like that spot all the way towards like this point, because this is like the order block over here, as you can see. So I'm expecting to short this all the way there. So if price retraces here and I find a opportunity somewhere like here, then I have a 2.4. So yeah, let's see how price plays out, because if it breaks this inter-term low, I will expect to take this retracement all the way towards, like, for example, like this type of thing. Pull back, and then you keep going lower towards this, and then you pull back, go higher towards this. So that's what I'm expecting price to do. 15-minute pullback FVG, as you can see. This one. This is a 15-minute FVG. And let's go towards gold. Okay, so on gold, right? On gold, we're seeing... Okay, it seems to have taken out this liquidity, as you can see. So it took out this liquidity. And you can see this inverse fair value gap over here. So this inverse fair value gap, you're going to use this towards to go lower. So we have a bearish bias because it swept this liquidity, and we're going to use this inverse fair value gap to go lower towards this draw. Okay, so we're going to go lower from here. So we have a bearish bias on Russell silver. So let's say bearish weekly. Let's see what's going on daily. It seems to yeah, I'm expecting this low to be swept on the daily. So I'm expecting price. Obviously, we have a bearish bias on the daily as well. So we have a daily bearish bias. Bearish daily 4-hour. Let's see. It seems to be sweeping liquidity, so I'm expecting price to go lower. So once it forms a proper order block over here, and you put this here, your stop loss right above, and you put this TP all the way down here, you get a 1 to 3.6. So ideally, would I entry off this? Probably not. I would wait for a pullback reaction, maybe for like a lower risk to reward, and just like drag it a little. So I'd entry from like a pullback reaction towards like this area, because it needs to go towards this anyway. So I could even like short this all the way and then go for 1 and 3 from here. This is what I want. So I could entry off that, but I need to wait for this. What am I saying? This is basically a demand level. This is 4-hour. I'm tweaking. As you can see, this is already mitigated, so I'm gonna get rid of it. So we have a bearish bias for 4-hour as well, but we don't really have any fair value gaps. So obviously this is a sharp turn. So obviously we have a bearish bias for 4-hour. So I'm expecting to short this towards the nearest BSL draw. I mean, nearest drawn liquidity. So you see that this has been used properly. This is already wicked into, so it's mitigated. So you could take this short from around here, from this swing high towards this swing low, under 5. I could short silver, but it's kind of like delayed though. If I entry here, then like I have like way less risk to reward, and I'm most likely to get liquidated. So maybe if there's like a, like I say, obviously we're going for a inverse, but like a safe reaction would be like a 1 to 2, honestly 2.5 or 3 at most, because there's a lot of displacement. A 3 at most, and when it pulls back to 2, you just like fucking get out. Simple as that. Seems like we... Okay, so you can see that this is a slight manipulation, I think. This is like a mess. It's like a fucking mess. Look at this 4-hour fair value gap. So we're going inverse, like we're going basically bearish on this 4-hour fair value gap. So I'm expecting price to take this inverse fair value gap, tap, and then go lower. So you can see that this is a... As you can see, this is the yeah. The fuck? So you can see that this is a retracement higher. And then we're gonna use like a fair value gap tap and then go higher. Anyways, that's all good. The fuck is this? I wouldn't trade this, honestly speaking.
To start getting yourself really, which reports its
What's going on
earnings after the bell on Wednesday, by the way. That is a really big deal this Wednesday. In fact, we may need to
This guy's following
coordinate a
order
live
flow.
stream for that. As I am now a proud NVIDIA shareholder, maybe we should do a live stream for the NVIDIA earnings call and see if we can watch my gains wipe away in a single minute, or the market continues to rip. I think here's the thing. NVIDIA, if you are somebody who watches the indices this week, NVIDIA is the biggest event of the week, because NVIDIA has the potential to squeeze this market higher off of huge AI spend, right? If companies are all spending a ton of money on computer chips, that shows that the AI trade is still intact. But if they're not, then it shows that maybe the economy is really cooling and companies are feeling that, so they're not buying as much from NVIDIA or placing big orders. We want to see big orders coming in for NVIDIA because it's going to be really telling of how, CEOs and big decision makers at these huge companies who are buying these